All right, it is the week of August 29th, 2022, and this is the Fight Business Podcast. I'm your host, Patrick Auger, and today we've got a shorter episode again for you this week. We will get back to longer episodes starting next week, but just a lot going on these past 2 weeks and not too much business news, so we're going to focus on the important things. We got three main topics. One, we're going to talk about The Rock and the UFC's new footwear partnership. A lot of implications to this, some for fighters, some not, as we'll get into. We need to explore it a little bit further, especially with newer information that's come out about this. Then we're going to do our quick hit section. Got a couple of things we need to talk about there. And lastly, we're going to dive into Triller doing an IPO, as well as being sued by Sony for non-payment. Lots to unpack and discuss there, so that's going to take up a big chunk of time. As always, got timestamps at the bottom. If you're on YouTube, hit the like, subscribe, bell notification. If you're listening on Anchor, Spotify, Apple, what have you, always appreciate it. And with that in mind, let's go ahead and dive right in. All right, first up on the docket, the UFC and Dwayne Johnson's Project Rock have launched their first ever co-branded Project Rock X UFC footwear, built for those who walk the walk. If you can't tell, I'm reading directly from a UFC website PR release. So some quotes from this. UFC's world premier MMA organization announced today that Project Rock, the innovative performance brand created by trailblazing global entertainer and entrepreneur Dwayne The Rock Johnson, has launched its first ever co-branded footwear, the Project Rock X UFC BSR2 in Project Rock slides. Let's see. Quote here from The Rock: "The men and women warriors of UFC compete in their iconic octagon with pride, purpose, passion, intensity, and mana," said Dwayne The Rock Johnson. "Legacy is a very important word to me, and our Project Rock is proud to deliver training gear to help support and fuel all UFC athletes who seek to establish their own impactful legacy in the UFC and beyond." We're talking here about a shoe, a unisex shoe, that a bunch of highlights they have listed here about what they're supposed to help for workouts, and then sliders, which I'm assuming we'll see tomorrow when fighters walk to the octagon, right? When they're doing that whole thing. So let's see. Starting September 1st, co-branded Project Rock X UFC footwear will be made available for sale at retail outlets around the world, online at Under Armour and Dick'sSportingGoods.com. So if you go to Under Armour, I didn't check out Dick's, but if you go to Under Armour, I'm assuming this will be the same price. They're retail at about $100. At least the BSR training shoes do. I didn't see the sliders. That's a fair amount of money for some shoes. Not a ton, but more than your typical sneaker. Also important to note that on Twitter, we had good old Robert Joyner, which is at Rob Nashville, who's great follow if you're not following him, kind of essentially say like, "Hey, Rock, you're exploiting the fighters here." And then the one and only John Nash followed up saying, "Asked around, and not only are fighters not going to get paid anything to wear the shoes, the UFC is apparently requiring fighters to do interviews with Johnson's media company, $7." So to recap real quick, you've got two brand new shoes, pair of shoes and then sliders. You have fighters being required to wear them to the octagon, I'm assuming, as well as wouldn't be shocked if they have to use them in training montages or videos or random stuff there. Maybe not, but again, wouldn't be shocked there. I would imagine the fighters would get compensated for any commercial shot or anything of that nature. But other than that, they're not getting a piece of the pie. And if anything, they are now required to do more work in that they're going to have to give interviews to $7, which is The Rock's media company. This isn't super surprising, right? We've talked about this for a while now. Given the control the UFC has on sponsorships, they are not required to give any money to the fighters for any new sponsors. They limit what fighters can wear to the octagon, right? Got to wear the Venum apparel, all that fun stuff. But in terms of how they split that with fighters, they don't have to split any of it if they don't want. And this is further proof of that. Providing that, sorry, providing that what we're hearing here is accurate from John, which I trust it is, you're getting paid nothing and you're doing more work if you're a fighter. How much more work, how many more interviews you have to do, we'll see. It may be just, part of the normal scrum if you're in the main event or a featured fight, and then you just, with the other media interviews you have to do, they just tack one on, or they do it at the same time, right? But wouldn't be shocked if it is a completely separate interview that you have to now do if you're a main event fighter or a featured prelim fighter or what have you, and you're not getting compensated for it. And it's more about just exposure. This was always the end goal, I think, for the UFC's uniform kits. Right? With Reebok, they obviously struggled, but with Venum, we saw this with Crypto.com, where yes, fighters got some part of the cut, still not a ton, right? For the $75 million or whatever it was. But this will continue to happen. You will have more and more sponsorships where companies are going to get their logos on the uniform on a UFC fighter in some form or fashion. I cannot imagine that the rest of the Venum uniform is going to remain blank for the remainder of their contract. I can't imagine it. They're going to at least attempt, the UFC will go out and attempt to sell more space on that. I wouldn't be shocked if started selling things on their shorts. Footwear is now kind of cut off here because The Rock has a deal with them, and I'm assuming that's kind of an exclusive one for at least Octagon apparel footwear. But, it's going to continue to happen. This was always the end goal, to expand revenue. The UFC has grown into most of the lucrative geographical markets at this point. There are still a couple of places they can look to expand, and that they will continue to expand, especially as certain areas of the world become more developed, get more of an influx in money. I believe Asia and India are going to be the next big geographical moves for the UFC, but they'll wait until kind of the time is right. Yes, Africa is there too, and they will take advantage of that. Even though Usman lost, they're still going to do a UFC Africa. That's still going to be a thing. But in terms of emerging markets, I think those are probably the next two on their list, is India and parts of Southeast Asia. When those will happen and how it will all go down, I don't know, right? I mean, that speaks to a broader economic impact. Lots of things happening at a broader level that could easily derail that or push that for a bit. So we'll see. But again, there's not a lot of uncovered ground where people have disposable income that the UFC hasn't already shown its presence. Because that's the thing. They have not made a huge splash in India or parts of Southeast Asia, but even if they did, they need to get a return through people essentially having enough disposable income to pay those high ticket prices to go see events and pay for merch and all the other and pay-per-views, right? Obviously the US has the highest pay-per-view rate, but you wouldn't want to go and then show pay-per-views for free in India if you can avoid it, right? There's a fair amount of money involved into moving into a new market, and that's what that would be. So instead, they've moved into sponsorships. That's been their growth strategy for revenue, and it's been working. They've re-upped on media rights deals, which isn't really sponsorship, but is adjacent, right? I mean, obviously, depending on what platform you're streaming or you're doing whatever content, that's going to affect, the media rights deals, or sorry, the sponsorships that you are able to acquire based on who's seeing it, who's got to deal with said company, et cetera, et cetera. But then you've seen all these sponsorship deals just continually come up. Crypto.com, The Rock, they're just going to keep coming, right? The NFT partnership with Dapper Labs. Everybody's telling me, oh man, like they really lost money. No, they didn't. The UFC didn't lose a dime on that. They made the agreement to sell the name, image, and likeness of their fighters, and then the UFC NFT guys are the ones who actually made the NFTs, sell them, etc. If that goes completely under, UFC walks away fine. They didn't. It's not a joint venture where they've put in some financial stake. They are just basically, oh, okay, you want our stuff? Cool. Pay us this amount of money and then use it however you want for branding. Same as regular trading card companies do. This is how the UFC is pushing its revenue forecasts and its growth. And we've talked about Endeavor relying on the UFC for the majority of its revenue right now. It still needs it. Other things are starting to turn in Endeavor's favor, but it's not going to be a quick and simple turn, especially with rising interest rates with 60% of their debt. That's just not how it'll work. So then we come back to the Rock partnership. Why are the fighters getting no cut when they've gotten a cut on the Venum deal, the Crypto.com deal, all these other deals? Why are they not getting some type of cut? I think there could be a couple of reasons. One, would not be shocked if there is some, locker room money thrown around for certain fighters. If you're doing a big commercial or you're doing, a featured interview or something, that wouldn't be super shocking to me. But it's not going to be standard and it's going to be at the UFC's discretion. The other piece of this is, again, trying to expand revenue, but they want to keep costs lower. Big way to keep costs lower is not give fighters any cut of this. It's that simple. It goes from a pretty low cost venture to a no cost venture for the UFC if they do this, right? Now, I mean, they do say here that it's a team up, right? So in terms of what that means, that can mean a couple of things, right? Co-branded project. I've seen that in my experience mean anything from, oh yeah, the Rock just, paid for the licensing and all that, to the UFC actually puts some money behind it and then gets a cut of shoe sales. But we don't know the details on that. Either way, though, cutting fighters out just helps keep costs down. And that's the name of the game, as we've talked about many a time. That is Endeavor's whole strategy in buying out the UFC and using them to fund the rest of their company. It's private equity, even though Endeavor isn't private equity, but it's private equity 101, right? Like you buy a company, you look for revenue growth, and you cut costs and bloat. And this is what they consider bloat. Now, will fighters be kind of outraged about this? I don't know. That's a really good question. It'll be interesting to see how many fighters pick this up. Again, we've seen a shift where more and more fighters are complaining about pay. They seem to kind of grasp the concept of maybe they are not getting what they believe to be their fair share. Unions are at an all-time high in public support in the U.S. That will play a huge factor. But whether or not that actually moves anywhere, hard to say, right? It hasn't done much yet. Again, whether they would go a union route, go an association, try to adopt the Ali Act, all of those have pretty huge blockers at the moment. Feels like things are slowly shifting towards a more union professional bargaining or fighter association type thing, but it's there's no real indication that is a guarantee and that's going to happen anytime soon. If anything, I would say in a 5-year time horizon, that's still not happening. Maybe 10 years if things continue to shift and build momentum, possibly, but it's hard to say right now. And then there's the lawsuit, which we'll actually get into a little bit in the quick hits, but lots of things in the way for fighters to kind of negotiate and bring some leverage to the table against the UFC. Regardless of how fighters interpret this and what they say, there won't be any action, I think, by the UFC or The Rock's company unless mainstream media picks up on The Rock's company's failings to pay fighters. I think that's the one button that could push this where suddenly you're going to say, well, actually, fighters are going to get this much pay, blah, blah, blah. I don't see that happening, but that's really the weak point here because while the UFC is accustomed to just absorbing an immense amount of negative feedback and criticism, they have kind of just rolled with it, and at this point are expected to roll with it, right? The Rock's company, on the other hand, Project Rock, they may take a more traditional approach to negative PR, right? Let's say a bunch of entertainment outlets, mainstream entertainment outlets like Variety or what have you, started reporting on the fact that like, oh, The Rock's doing this UFC deal, but isn't paying the fighters. That's crazy. Then he might push for, we got to give him something. Or the people in charge of the project, because I doubt The Rock is the one spearheading this individually, right? They may push for something, but again, it's hard to discern whether or not, if that happened, it's hard to discern whether or not they would react that way. And I don't see any indication right now that that's going to happen. There's a couple of articles I've seen out there, but not from bigger name outlets. And again, if it's just the MMA media reporting on this, there's very unlikely to be any pushback that affects the Rock and the UFC not paying fighters. And this, again, will continue to happen. I would bet money that in the next X amount of years, we will continue to see new partnership fighters get paid nothing or get paid a fraction of the deal. We don't know the specific terms of this deal. It's true. It might be contingent on specific retail sales. Even then, it's hard to look at and say, okay, like this isn't a cost-cutting measure. As why fighters are getting kind of pushed out of this deal. I can't look at it any other way from a business perspective myself. If somebody else has a different opinion about this, I'd be happy to hear it and discuss it. But again, this looks like classic new sponsorship and then cost-cutting measure. We're not paying the fighters on this. Should the fighters be paid? Hard to argue that they shouldn't be compensated in some way, just because if they're truly independent contractors, right? You can't just modify a contract midway without both parties signing on. I've done many independent contractor agreement. Once it's signed, you can't tell someone to do more work that's outside that scope without an amendment. Right? You can't. People now that doesn't mean that as an independent contractor, I can't say, okay, I'll do this for you, right? If I want to maintain the relationship, which is kind of what a lot of this is. Sure, I want to be on good standing with you. I want to keep my client happy. Sure, I'll do this for you. You can say that and it's fine. But if I were to push back and be like, no, you can't do this, then it would be up to the company to decide what would happen there. Right? Would you propose an amendment and then we sign it? If not, there are a million different other ways you can terminate agreements, or you can, in the UFC's case, they can punish independent contractors by assigning them particular work, right? Wouldn't be shocking to see that happen where, okay, you're not going to do this stuff? Fine. Then blah, blah, blah. But my guess is these contracts are also, the fighter sign here, also basically contain provisions that say, at its sole discretion, the UFC can add X and X sponsor, and as part of the uniform agreement and policy, fighters will adhere to wear this without any additional compensation, blah, blah, blah. I'm sure there's some clause in there that covers all this. So there isn't really that much of a leg to stand on for fighters in terms of pushing back contractually. Because I can't imagine the UFC would not have included that somewhere, since this was their end goal, or at least I believe it was their end goal. So let me know your thoughts on all this. Should the fighters get paid here? Do you care if fighters don't get paid? Is that kind of like, this is what you signed up for? It's just a uniform, get over it. Love to hear what your guys' thoughts are and opinions are in regards to this topic. But yeah, expect more of this. Again, I will shout it from the rooftops over and over. Next 3-4 years, that UFC uniform is going to look a lot different than it looks right now. All right, on to our quick hits section for this week. First up, the UFC is extending its apparel deal with Venum. So as we just talked about with sponsors being able to put their logos on the Venum uniform, the UFC and Venum have announced a multi-year extension of this. This comes from MMA Junkie. UFC COO Lawrence Epstein told MMA Junkie at the time the agreement was set for 3 years, but less than halfway in, two sides have opted to extend in a multi-year renewal. We don't know any financial details or the exact time frame, but it sounds like it's going to be at least another 2 or 3 years added on to the deal that was already in place. Venum founder and CEO Frankic Dupuis, was quoted as saying, "The enthusiastic reception from UFC athletes and fans to launch and release of our UFC collections has convinced us to continue our adventure inside the octagon and to continue to improve our products to serve a demanding and passionate public." So again, no idea if this bumps up fighter tier pay at all, what the new financial deals are, whether Venum got more money for the extra years, if it was the same amount of money but just extended over a longer period per year. But this isn't super shocking. It makes a lot of sense. As we just talked about, the ability for the UFC to bring in additional sponsors and put them on the Venum kits is a huge boost for this partnership. For Venum, this is obviously a big deal for them. It gets their name and brand out there far more than if they were not in business with the UFC. And my guess would be where Reebok, being a bigger company, having kind of the already established brand and name, probably was a little bit more selective on what other sponsors could be put on their uniforms and may have been a little bit harder to work with. The Venum deal with UFC has gone really well, I think, in part because if I had to guess, Venum is kind of giving the UFC carte blanche to do whatever they want with the uniforms and put whatever additional sponsors they want on the uniforms. Clearly, the UFC has all the leverage in that deal, whereas in the Reebok one, yes, they had some leverage, but it was far more. It was closer to an even seat at the table for both parties, just given the name and size of the Reebok brand. So not surprising at all that they've decided to extend. Makes a lot of sense for both parties. Wouldn't be shocked if it extends again once the deal is actually up. Next up, we have to talk about an article from the Wall Street Journal stating that Disney is exploring a membership program like Amazon Prime to offer discounts and perks in kind of package streaming, theme park access, all this kind of deal. So similar with Amazon Prime, right? Where you pay the whatever fee, you get packages delivered faster. You're able to watch Amazon Prime streaming. You've got some music on there, I think. You kind of have that, multifaceted service. Disney is looking at doing that with Disney Plus, and I would assume ESPN Plus and Hulu are also on the table with that. And then you can also get, tickets to their theme parks or other offerings that they have. It's not a bad idea in a lot of ways, especially given the size of Disney and their multi-product offerings. How this would affect MMA and why we're bringing it up is the more that ESPN Plus gets put into these kind of bundles, right? We've already talked a little bit about the Disney Plus bundle, which is Disney Plus plus ESPN Plus plus Hulu. The more it's packaged into these bundles and the more Disney focuses on bundling everything, it diminishes the individual impact of each service and product, right? If the bundle becomes super popular, yes, what products are offered in that bundle is important, but ultimately the amount of bundles being sold is the bottom line, right? If for whatever reason, you've got let's take the Disney Plus bundle, for example. You got Disney Plus, ESPN Plus, Hulu. Let's say those bundles are selling in far greater numbers than individual memberships to each one. When you look at the actual revenue, right, you might drill in and say, well, a lot of people are not buying Hulu. Like, that's actually the weakest one. If we just did a Disney Plus, ESPN Plus together, people would take that. Okay, well, then you might dive into those numbers and look at maybe cutting Hulu or having Hulu be standalone or what have you. But as long as everyone is doing well in the individual stream, or at least average, it's much harder to drill in and say, man, we really need to tweak what content is going on to ESPN Plus because of blah, blah, blah. That's not to say that there won't be people focused on that. And there won't be whole divisions focused on that. But the larger the company gets, the more diluted its importance becomes, right? I've worked for some huge companies. I mean, massive Fortune 500, Fortune 200 companies. And what inevitably tends to happen in these situations is you get these fiefdoms, right? Where in this scenario, you have Disney being Disney, and then you have the theme parks division, and then the streaming, and et cetera, and studios and all that fun stuff. And each fiefdom becomes more and more isolated from the grander picture, where if the C-suite and executive team is busy focused on 100 things, it's harder to see the one or two that might be slipping, or if they're fine, it's harder for them to care, right? There's just too much going on, and there's too many strategic planning initiatives that have to be done. The squeaky wheel gets the grease or the oil or whatever. Sorry, again, it's been a week, but you get what I'm trying to say, right? And as that happens, it then becomes, as we circle it back to MMA, the UFC will become a less important factor in the grander scheme of things. Now, that's not to say that the media rights are going to be terrible, right? When this comes up for renewal, like, they're not going to offer them at least, double what, or at least what we've seen in the past couple of years. But the smaller that cog becomes, right? The smaller that financial item and line item becomes in the grander scheme of things, the less incentive there is for Disney to tell ESPN, like, hey, you've got to bid for the UFC media rights and you've got to make it a huge deal. Because if the UFC and ESPN, and that deal is making up a percentage of ESPN Plus, which is making up a even smaller percentage of a bundle, which is making an even smaller percentage of et cetera, it's going to lessen the blow and the impact of if something changes there. So it could very much adversely affect ESPN's offerings for media rights to the UFC. And I'm not talking, again, by hundreds of $millions here, but enough that somebody else might make a better deal and the UFC might switch. It doesn't take much, right? Other people are going to bid for the UFC's media rights, and it's going to be a focus for a lot of other companies. It doesn't take much in these tense bidding wars for one slight thing to alter where the UFC ends up. I mean, we've just seen what happened in Brazil in the UFC media rights. This could hypothetically impact in a ripple effect down to the UFC and ESPN's deal. Will it? Way too early to tell. I mean, Disney is just exploring these bundles right now anyway. But it's years off, and it's years off for the UFC ESPN renewal. So that's why I'm bringing it up. I will keep an eye on it, but it could have a ripple effect, right? The more you package a product to be part of a larger bundle, to be part of another larger bundle, the impact each individual product or service has lessens by a set percentage or amount, and it continues to do that way. So that's why I'm bringing that up. Last thing we need to talk about is there was a motion to dismiss the Kajun Johnson lawsuit against the UFC, antitrust lawsuit. So if you remember, in the antitrust lawsuits, there's the original, and then there was the one brought by Kajun Johnson from 2017 onward. Zuffa is now looking to dismiss the Kajun Johnson lawsuit. And Judge Boulware, who is alive and well, has opted to set a video conference, I believe, at the end of this month to discuss that motion. So I will attempt to attend that, and we will figure out whether or not that will actually happen on time. I'm sure we won't hear anything about, the motion to certify the class, especially with the other stuff going on in the Supreme Court ruling. So, which, by the way, I'm not going to get into it on this episode, but if you haven't read MMA Payouts and Jason Cruz's work on that, highly recommend you need to go check that out because of what's going on. But yeah, this is a motion to dismiss, not the main one that we've been talking about over and over with the class certification, all that. This is instead the second lawsuit that Kajun Johnson brought that covers 2017 and beyond for fighters and the class action lawsuit. So we'll see what happens there. I will keep you informed. But yeah, that's our quick hit section for this week. Let me know your thoughts, comments on anything I just went over. If I missed anything, let me know so I can add it to the next quick hit section. And I love, giving props to readers and listeners. So let me know, guys. All right. Last thing we're going to talk about today is Triller has announced its IPO, has raised some money for it, and they're getting sued by Sony for non-payment. So if you haven't been following, and I know we haven't talked about Triller on the podcast in quite a bit, but Triller confidentially filed for an IPO at the end of June, was originally going to do a SPAC, but that kind of fell through, similar to what happened with One Championship, right? Where they were all pumped up for the SPAC and then kind of didn't happen and then went to an IPO. Triller's doing the same thing here. They've raised $200 billion in financing in the form of convertible debt, and their new target valuation, this is also according to musically.com, is down to $3 billion. That's 40% less than the $5 billion they were targeting with the SPAC. Now, as we've talked about before, the SPAC market kind of imploded. It was very strange, right? Made a weird comeback during the pandemic and then just kind of imploded. But with it, IPO markets have also softened quite a bit. Not as badly as SPACs have, but still not, a huge amount of appetite for IPOs. So this seems more of a plan B option than we think it makes sense to, go IPO instead of SPAC, especially, cutting your valuation almost in half. It's definitely a plan B. And it's not great for Triller in the long run, right? This is a company, again, that has followed the mark of so many other companies, Endeavor included, of finding a niche and then acquiring several parallel or sometimes even non-adjacent services and products and putting them all together under one umbrella where you can, get some synergies in terms of efficiency or cost. You're able to get those, but it very mergers, acquisitions heavy. Between the, TikTok app type stuff, the versus where, the rappers go against each other, the BKFC and Triller fight shows and boxing, right? It's just kind of this mishmash of things all put together that there are some synergies there. And it's kind of unconventional synergies, I would imagine, but it's more about just acquiring a line, adding to the revenue, and then building for the inevitable sell, right? You leverage your debt up, you get it public, you cash out as an executive, and then, you can stay if you want, but the end goal is the exit strategy is IPO it, get your money, and then either on to the next one or decide to stay on and continue to work on it. It's pretty much what Endeavor did. Endeavor, I would say, had a little bit more foresight in their synergies. Then again, it's, a little bit of this, a little bit of that. So anyway, this is a normal strategy for a company like Triller to take. Raising the $200 million in convertible debt is also big for them before going to an IPO and trying to sell this. But we know that Triller has raised a total of $400 million, at least that we know publicly. So that's half. They've doubled what they've raised with this latest round. But we know that they have trouble or history in the past of paying particular people. As noted in this article, given past controversies around the company's public statements on user figures, there will be plenty of interest in its S1 filing. Yes, because Triller has said that there's a ton of users using its app, all this other stuff, and there's been a lot of speculation on that. We also know that Sony filed a lawsuit recently claiming that Triller has not only failed to make monthly payments totaling millions of dollars, but has also continued to provide Sony's music catalog for use on the platform, despite Sony terminating their deal on August 8th. So Billboard is reporting, according to this article, that Sony is suing for copyright infringement and seeking damages, as well as requesting an injunction to stop Triller from using its recordings. We've also seen Triller do this to UMG, and, not pay, I believe it's Swiss Beats and forget who else. Oh, Timbaland announced that they were suing Triller for mispayments, as well as some fighters like Sergey Kovalev not being paid. It's not great, right? It's not a great look for Triller. So the question becomes, why are they not paying these people, especially when they just got $200 million in a convertible note? There's a couple reasons, right? Again, we don't know exactly what their financials look like, so the S1 and the prospectus will hopefully shed some light on that. But two, what could be the case is accounting, right? Now, for those of you uninitiated with accounting, yes, it's financial statements and numbers and what have you, but there are different accounting methods and there are a lot of tricks. And I guess, I want to say tricks, and I'm trying to think of a good word for this. There are a lot of tricks and methods, sure is what we'll go with, that can be used in accounting to paint a picture in the way a company might want, especially if that company is private, right? And not being audited in a way that a public company might be. It's a lot like data analysis. You can pick certain data points and you use data to tell you a story, but you have some influence over that story. It's not just, this is the raw, hard facts, unjustifiable truth. In some cases, it's that clear cut. In a lot of other cases, there are ways to at least lean the story more towards one decision or another. I've seen this happen a ton in my time. When I was younger, I also made the mistake of nothing unethical, but, I looked for certain data points and certain things that my own bias got in the way. And it wasn't until, during the reviews when I was, and this is when I was right out of college, and when they were like, well, did you look at this and this? And they're like, got to be careful of your own bias. And it's true. You do. Accounting has some of those same qualities. You can do that with accounting in some ways, right? If you are a cash method basis, then you're only taxed on current receipts. There are tricks that work where if you don't, for example, if I'm going to investors, right, or to look for money, to raise money for financing, and I'm behind on payments to, let's say, Sony or what have you, if those aren't reflected in my financial statements, right, because I haven't actually paid them out, even though I definitely owe them, there are ways you can look at and set up the financial statements to kind of shield that, especially to the naked eye, right? To move some of the debt into different line items that, unless someone's going to, meticulously go in and dive into these things, may not realize what's going on and may see a different picture than the one that's actually there. So if I go into an hour or 2 hour long board meeting where you go over your financial statements, there's a good chance I might miss it. as an investor, right? Because investors are not hiring, at least, I mean, depending on the amount of money they're going to spend and the agreements, this is not always the case. But a lot of times, investors do not hire their own accounting firm to go and pay them to go do an audit of a potential, company's books, right? They kind of have the investor presentations, they have some handouts, they look it over, and then they kind of make their decision. Now, if we're talking tons of money, then sometimes you see that happening. If we're talking, buying like a huge amount of equity, you can see that happen. But if we're talking about, doing particular institutional or retail financing, there's a good chance the investors got a packet and a presentation and then maybe looked into it a little bit, but didn't spend a ton of time on it, because usually those investors are also looking at hundreds of presentations and have a lot going on. They're not going to focus on just one singular entity. You'd have to go pretty heavily into something or near all in for that to be the case. So again, depending on the accounting method used, you can definitely put things in certain areas that make it appear that you're doing quite well in certain things without your future obligations or even past lapsed obligations show up in the financial statements. I've seen this happen before, and it's all technically legal, right? Ethical, you could get into that whole dilemma, but from a business standpoint, definitely legal and definitely something I've seen companies do before. So that could be part of the reason why you've got these late payments. Is, hey, I've got an investor meeting here. I'm doing this. Great. I'm going to go ahead and do this. They need to sign off by this date. We have to say we're not going to material change our financial forms by this date until we receive certain money. Cool. We get that money and then we go ahead and pay them out, right? As we're seeing, with Triller saying, hoping it was just a misunderstanding that they didn't pay Timberland and Swiss Beats and they've paid other people late. This is something that could be tied into that. Now, I'm not saying that's what's happening, but I wouldn't be shocked. I really wouldn't be shocked. Also, again, you have to go to court, prove it. If you're Triller, you can sit there and deny and say, no, we didn't do that. We did pay you this. This is fine, whatever. And then it's up to the investors to then look at that and say, okay, am I spooked enough to get out of this? Or Triller's telling me that they're fine and that this is all a misunderstanding. Sony suing them saying they didn't get this money. These people are suing them saying they didn't get this money. Who do I believe here? Well, I probably have a relationship with Triller and certain people at Triller, right? If they're selling me on something, I probably trust them to a certain degree because I've already decided to be pretty interested in financing. Or if I've already put money in, might be kind of a sunk cost fallacy of like, I've already put money into this. I trust this guy. I believe in his vision. I'm going to side with him, right? Bias all over the place. If a company, a CEO, VP of sales, what have you, if someone is able to get you to buy in to the story and the belief of a particular company, it can be very hard to rattle that belief. It's something we see in bigger companies all the time. WeWork might be the greatest example of this. That was something that Adam Newman was phenomenal at, is selling the story, getting people with tons of money to buy into this belief that WeWork would be this technology company and all this stuff, where on the outside you were probably like, what? This doesn't make much sense at all. But as things started to fall apart, right, with SoftBank and WeWork, SoftBank didn't just pull everything and say, okay, we're done here. They kept bailing WeWork out to the point where then they bought WeWork for a much reduced price instead of what the IPO was going to be and paid out Adam Newman a ton of money. Right? It should have been something where SoftBank should have looked at this and said, okay, this is a sunk cost, something is wrong, cut ties, been done. Instead, they continually tried to help them out. The same goes here. If you've already put money up for Triller, you believe in this, you're sold on the idea, you see, the Jake Paul boxing matches, you see the Versus doing so well, all this other stuff, you see how well TikTok's doing, you see Triller as a competitor to that, you believe in the space, you believe in the story, and then you've got a bunch of people saying, hey, we didn't get paid, and you've got Triller on the inside saying, no, we did pay him, they just don't understand, it's fine, blah, blah, blah. You're much more likely to believe Triller than you are Sony. Now, yes, you've got a lot of voices saying they didn't get paid. That should be a red flag, but depends on how much you're in for. Depends on, well, this isn't great, but can I get my money back? Sunk cost fallacy has a lot of pull on people that you would think it does not have a pull on. But trust me, I've seen it happen with lots of people with a lot of money who should have gotten out way sooner, and then they don't. It is a true bias that a lot of people struggle with. And that's how it is. So again, wouldn't be shocked if Triller is using these, non-payments for something with what they're talking about to investors. And then also wouldn't be shocked if people still keep giving them money. I mean, that 40% valuation cut is never good, but it's still $3 billion. So if you've invested early on in Triller, you're still probably making a lot of money. You're probably not making as much as you would hope to, but you're probably hoping still that you're going to end up with a $3 billion valuation and your IPO is going to do well. Right? It's much harder than people think to stop investors from financing ideas that clearly have issues. And I'm not saying Triller can't pull this all off, right? But outside looking in now, a new investor is probably far more wary than someone in the money and that kind of believes in the vision. And even then, if you can sell the vision, we've seen this happen with other companies, especially in MMA. If you can sell the vision, regardless of what your actual financials are, I mean, you're good to go. That's pretty much the CEO, president, what have you job, is sell the vision of the company, get investors to say, you know what, that sounds awesome, we're in. That's really what it's all about. So where this actually ends up, that S1 filing is going to be massive. We're probably going to do a big podcast on that when it comes out. And where they end up going for, a price, as well as how the stock does the initial day, that'll all be very interesting to me too. But until they actually file the S1, we're kind of just left in the dark on this. I would expect them to pay Sony and Swiss Beats and Timbaland and the fighters that they haven't paid. Anybody they haven't paid, I'm assuming they will get that all going before the IPO is launched. They may not, but it would probably make sense for them to kind of clear that all out before they go on the roadshow to sell the IPO to institutions. So wouldn't be shocked if that stuff gets resolved sooner rather than later. But yeah, it's welcome to startup land. Let me know your thoughts on Triller. Do you think Triller is going to make it? Do you think Triller, if Triller goes public, are you going to buy stock? I want to hear from you. What's your belief in the company? Your thoughts as a consumer, or if you're on the business side, what do you think is going on there? It's interesting, to say the least. I am excited to see what the prospectus looks like and see where this goes. That's for sure. So yeah, let me know your thoughts on that, guys. All right, and that wraps up another episode of the Fight Business Podcast. Appreciate you guys listening. Again, like, subscribe, bell notification if you're on YouTube. If you're on Apple, Stitcher, Apple, Stitcher, Spotify, what have you. Love you guys as always. Feel free to, drop me any lines on anything. I've talked to a couple of you guys. It's great talking to you. Love talking about this stuff. So keep doing that. Twitter handle is alldayoj. That's probably the easiest place to find me. You can also leave comments on the Sherdog page as well, or the YouTube. I usually get to them. So let me know any topics you guys want me to cover in the future. We will go back to longer shows, I'm assuming next week after the holiday. But yeah, until then, y'all, enjoy your holiday weekend if you are in the US and you have Labor Day. If not, I'm sorry, you got to work. And get money.